Ladies and gentlemen, SoFi Q3 earnings had just been released. We're super excited to get all the numbers, but what we didn't really give a lot of credit to was the fact that they unveiled a brand new product during that earnings results. Okay? One that actually made up for roughly 9% of their total revenue, and yet it's only been out for a few months. What am I referring to? I mean, there's a bunch of customers here of SoFi that might not have gotten the press release that this product is brand new, but it's actually an institutionally facing product, one that customers will have no awareness of. That is their loan platform business. This is where SoFi is going to go out to a bunch of institutions and say, hey, you guys have money, we have clients and the underwriting abilities. You give us your money and we will give you loans that actually are going to, reap you coupon rates and make you money over time. All we ask for is a commission fee and potentially servicing rights to those clients going forward. Now, this, in a matter of just opening up in the first quarter or so, has already originated $1 billion worth of loans just in this quarter. Okay. That's absolutely amazing. It's clean revenue. There's no financing commitments or loss sharing agreements that they have to do. Unlike other businesses that also do a similar business, okay, look at Upstart, for example, they originate loans for other individuals. And you can see last quarter, they did about 1.1 billion. The quarter before that, 1.1 billion. The quarter before that, almost $1.2 billion worth of originations for loans for other individuals. That's their entire business. And yet they cannot say the same about the financing commitments and loss sharing agreements. They do all of that. SoFi, they collect a fee up front for originating loans for third parties. And we're already at, $1 billion in the first quarter. So, like I said, SoFi is originating loans for these individuals for a commission up front, okay? It's pure cash up front at the time whenever the contracts are signed before they actually originate the loan, okay? So they said all the contracts are signed before we actually go out and put any risk on our side. Now, from the $1 billion that we've already received, actually brought in roughly $56 million or about 5.6% commission rate. And then on top of that, they receive another 5.5 million for servicing rights on those loans that they actually have on the platform. So $61.5 million are coming from this platform on just $1 billion of originated loans. SoFi has already said that they have commitments for Q4 and for 2025 going forward, and you can expect roughly between $4 to $6 billion originated over the next 12 months. Now, even for 2025, they said it's going to be even more than $6 billion. They say that those estimates are kind of shy and they actually suspect more than $6 billion. So the amazing part here is the competitiveness versus all the other players that do this, because Lending Club does this, Upstart does this. There's a whole secondary market for people that want to get loans to other institutions and using their underwriting style, right? That's perfectly fine. But with SoFi, they can be very competitive here, unlike Upstart, which they exclusively do this, right? SoFi actually has a platform where they do SoFi Money and SoFi Invest and home loans and student loans. So we can take our existing members and bring them over to personal loans for those third-party institutions, and yet we can still keep those members on the platform to then go out and get a credit card, get deposits on the platform, get the SoFi Invest account, and reap other rewards of the SoFi ecosystem. So we are actually making so much more on a per-client basis because they're expected to be integrated into the system by that point. But let's talk about some secondary effects of just how good this new product can actually be. So first off, 70 to 80% of SoFi's loan applications are actually declined. Now, that might not even be due to them maybe not meeting FICO requirements, cash flow requirements, income requirements. It could just simply be because SoFi has so many loans outstanding and they have a balance sheet to essentially balance. They can only be so capital constrained. So if they don't have any capital left, all the originated loans we could continue to sell to other third parties, even if they are really high quality. Okay, so this essentially means if as long as you can find buyers for these loans, which Anthony Noto and Chris Lapointe said they have essentially so much demand for this product that they feel like they can solve the amount of lending requirement that people are asking for. So SoFi wants to originate, let's say, $4.9 billion worth of loans for themselves. Okay. But maybe there's a total amount of loans that are high quality, 700 plus FICO, that is essentially $10 billion worth of originated loans in this quarter that people are asking for. Well, 5 billion of those loans just went out the door in terms of how much money SoFi could have made on them. But with this first iteration of this product, we're already taking 1 billion off that list. So 4.9 now turns to 5.9. But as it starts to scale and as they get more partners, we could see this amount of originations, as comparatively to how much SoFi is originating on their own, continuously growing. Now remember, the loans that SoFi is signing on their own balance sheet are extremely capital intensive. It's a loan. But whenever you're originating it for others, it's extremely capital light, and it's essentially being looked at as just a software product being sold. So you can just sell those loans to other institutions, and all you're reaping is a commission that can then be put back into the ecosystem for SoFi to essentially do it all over again. And in fact, because it is so capital light, we can take a look here really quick. SoFi lending platform actually falls under a financial services product, which is what you're looking at here. And this unbelievable jump up to nearly $100 million of contribution profit for financial services and a over 10% bump in their margin has largely to do with this new product line. So we don't know the exact margin of the lending business or of the loan platform business, but we do know that it's extremely accretive to their existing financial services platform. So every dollar that we're getting here is, well, not every single dollar, but a large percentage of the dollars is going to the bottom line, which means SoFi can then, run that through sales and marketing again, try to get more and more members on the platform. A large percentage of them might go to the loan platform business, and we recycle that, cycle all over again. Meanwhile, a lot of those members are going to get SoFi Relay accounts, credit cards, invest accounts, SoFi Money, and have nothing to do with the loan platform that only SoFi benefits from the earnings that we got from this third-party platform. In theory, SoFi can match the amount of demand that their members have, and that historically has not been the case. So hopefully this will lead to a massive boon in not only revenue, but also profits. But there's a lot more to this. So let's get a little bit into the actual finances. Like I said, there's a real potentially 5.5 to 6%, sort of commission that we're making on this based on the amount on the $1 billion that we already signed. Now, Anthony Noto has also already come out and said, depending on the size of the client, obviously, if they're really big like Fortress at $2 billion alone, then they're not going to be signing these deals too quickly at really high rates. They're going to give them preferential treatment. But let's assume, because they already said they're going to do $4 billion annually in this, like just going forward. And for 2025, they said it's going to be north of $6 billion. At a 5.5 to 6%, you're looking at a roughly $240 million annual new business that literally was not here in Q2. Like, we were not talking about this on the platform. And so we were trying to wrap our heads around financial services saying, how can this grow at 80%? It just doesn't make sense. What we were never accounting for was just a completely new business line, which also is very exciting for 2026, considering that guidance was based on current products that they were already dealing with. Is the SoFi lending platform now, separate from that? Is that additive to their long-term, guidance plans? Now, I wanted to show this off. I already said that it made 9%, but that's essentially how it breaks down. So very exciting there. But one of the other things that I want to talk about is the long-term effects that this could potentially have. Okay, let's take a look back at SoFi of 2017 versus today of Q3 of 2024. Okay, the old vintages back then were essentially half as good as what they are today, or from an ROE perspective or a return on equity perspective, being north of 30% on these new vintages is twice as good as their 2017 loans. What does this mean? This means that the more loans that SoFi originates, the better they are at learning how to originate better loans. Okay, so we are, now underwriting 4.9 billion in this quarter. That's great training data for them going forward. But this additional $1 billion, even though it's going externally, tracking that data is going to be amazing for SoFi's understanding of their own member base. So if this does scale from 1 billion in this quarter to 6+ billion in 2025, this is amazing learnings for SoFi going forward for not only their better pricing on third-party loans, but also better pricing for their own loans because they still originate to sell loans in a wholesale environment. So that's another thing, right? People on the conference call asked, hey, is this going to be cannibalistic to your wholesale loans? Are people going to go and ask for loans that are on SoFi's balance sheet, or are they going to go directly to the loan platform business? Well, SoFi said, hey, we actually got a ton of new partners. They said we have, clients lined up and like committed capital for Q4 and 2025 already. And the high majority of them are clients that were not part of our wholesale loan. They didn't say all of them. They said there is some overlap between, committed capital for the loan platform business and the wholesale lending of their own balance sheet. But it is not, completely overlapping. It's actually incremental to their overall lending performance. So this is extremely exciting. It brings, the total amount of non-interest income as a percentage of their overall business up. Financial services is not capital intensive. And so the type of revenue that they're bringing on is super good for them. And there's so much learning to be done here for their own lending. Now, let me just read these Anthony Noto quotes because they're absolutely amazing too for this. We're heading into 2025 with the most favorable conditions of the last 7 years with declining rates and a stable economy. Okay, so not only is their lending supposed to do so good, but their third-party lending is going to do phenomenal as well. Now, another one. We're seeing excess demand from both a borrower side and a loan investor side for our unsecured personal loans. So just, sky's the limit here. They haven't found the top at all. And we're getting into an environment that's looking even more favorable for this into the future. So very, very exciting. For people who potentially think that, a lot of the sort of innovation or new products coming from SoFi are potentially not exciting, or they want level one options, or they want election betting or something like this, I can promise you this product will be more impactful to SoFi's bottom line than level one options, election betting, futures, and index trading all combined. So this is super, super exciting. They are a lender at heart, and now you're getting the lending with capital light business. What more could you ask for? SoFi's price action can do whatever today. I mean, honestly, let's focus on the fundamentals. It was the best quarter we've ever seen from SoFi, and analysts this time around are actually being very favorable. We're seeing a lot of price target increases, and I think that they're really taking well to this new capital light approach. But ladies and gentlemen, that's it. That's the video. If you want more SoFi or other fintech stock analysis, make sure you guys just hit the subscribe button down below. Hopefully you guys join into the live streams. We do one every single day at 8:30 p.m. Eastern Standard Time. But until next time, bye for now.